Hi there, I'm Matthew with Forex-Nation.com. This is my video lesson regarding the Alligator indicator, which is one of my favorite indicators. I use it for a lot of different things when trading foreign currencies, specifically the euro dollar. And let me just jump right into it first by explaining this is not the Bill Williams Alligator indicator where the initial term comes from, but it is based upon his theories. And then basically that theory is whenever the red moving average crosses over the blue, you want to trade going in that direction because that signals an indication that momentum has shifted. So we have a crossover here going under the blue, so we're going to enter a sell here. And as you can see, would have made substantial profits there. When it crossed back over here, we would have closed out that initial sell from up here. Very happy. And then when it crossed back over again, let's continue on with this. It goes down, and as you can see, that's what the markets do. They consolidate, profits being taken off the table by the big institutions, the big money managers, and then pretty soon continuation occurs because of economic data coming out. And that's exactly what was going on here. We had strong economic forces working in favor of the dollar and against the euro that was causing this downtrend. Now, the markets don't always trend down so beautifully like this. A lot of times they get choppy. Matter of fact, I think it's about 60% of the time you're going to see choppy markets where they're ranging. And what that means is they're making a low. Oops. They're making a low and they're making a high, and then they're making a similar low and a similar high, and it can become very frustrating for traders, especially new ones, to understand the market when that's going on. That's when you have to basically learn how to adapt to the market conditions and use your indicators in conjunction with other indicators and start putting more weight on those other indicators when the time comes. So in this case, when the market was trending so hard before and then became a ranging market, the alligator still works. And I'm going to zoom in here and show you. You know, the alligator still worked. When it crossed over here, things went down. When it crossed over here, things went up. Again, down, here, fake out, here, down, up. So, you know, one fake out of 5 or 6 continuous good trades is great. And that's what you'll see. Now, this I call braiding when this happens. And this is going to happen because of fundamental forces going on in the markets. And that's where your fundamental analysis comes into play, which I do for you over at my website. I analyze the day's events. I analyze the upcoming economic news releases. I let you know what's going on fundamentally. But that's how you stay on top of knowing if the market's going to start trending or if it's going to continue to range. And then as far as using this in conjunction with other indicators goes, real quick, here's an actual trade I can specifically recall taking where I use it in conjunction with the weekly pivots. And I'll show you what I did there. Oh, and this is a good example of how I use this on my other time frames. Now, I'm on the hourly time frame here. When the crossover happened here, I didn't want to trade this because it was going against the main trend. Remember, it was a downtrend, so I didn't want to trade this thing going up. I was just going to wait for it to reach a point of resistance, which the weekly R1 was a great point of resistance. When I saw this happen, now, combining the fact that it's technically at a point of resistance with the fact that fundamentally there was some economic data about to be released, I expected this currency pair to go ahead and continue back down and to fall. What I do in cases like that, when I'm expecting the crossover to happen, is I'll zoom into my 15-minute time frame where I will leave the blue and the red moving averages up, and I'll look for the crossover to happen there because that's going to happen a lot sooner there than it would, here we go, than it would on the hourly. So here it happened, and I would have gotten in here at 30, well, we'll just say anywhere in here, so at 37, 50s. On the hourly, you can see the crossover happened on the hourly later than that, down here in the 37, low 3700s. So that's another quick visual on how you can zoom in and on the 15-minute and use this indicator to get early indications of when the momentum changes by using the same 2 moving averages. One other thing I'm kind of forgetting and not mentioning, but I want to, is momentum. Momentum is a very important thing when you're determining how the strength of a trend. The momentum is crucial. As you can see, when momentum is great, then the distance between the 2 moving averages is great. So when you see the red and the blue with a considerable distance between them, you have considerable momentum. At which point you can go ahead and re-enter a trade whenever price action moves towards that red moving average. Here you could have entered a trade, anywhere in here would have been Okay. After that, here's a perfect example where it retraced to the red, fell off, retraced to the red, fell off, retraced to the red, fell off, crossed over. But now we see we've been working our way down so much, momentum's starting to die out. Traders are starting to not be so sure that we need to keep pushing this thing down any further, and you see the momentum dying and it's more choppy. At that point, the blue moving average becomes your next point of interest to re-enter a trade. You could have re-entered here, 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 here. All those points would have been great points for entering a sell and making profit. And then the momentum built back up again. You could have entered here, here, here. You know, that's just kind of the visual way for me representing how I think I go over in my lesson. You can re-enter trades based upon the red or the blue moving averages. So yeah, that's the gist of how to use the alligator from a real brief perspective. Now I encourage you, leave me questions or comments. I teach this stuff for free over there at forex-nation.com. I'm not selling anything right now, so I encourage you to jump on board this opportunity to kind of learn this indicator and learn how to trade these markets. Thanks again for watching the video, and good luck to you out there.